Andrew is new to Outlier. Will you show us how to use the platform to go about choosing a stock that's worthy of a trade? That's a great question, Andrew. So let's start by doing this. I'm going to jump into Outlier 2.0. And first place that I would start is I would go over to the screener. Now, when you're in the screener, it's going to present you with a myriad of opportunities. I'm going to show you my screener criteria. And then, of course, you can build your strategy based on that. That was yesterday's thumbnail. Give me just a second here. Okay, so this is my screeners that I'm looking at. Now, with Outlier 3.0, I will be doing some more backtesting on these type of things. So this may change soon. Outlier 3.0 is slated to go live on Monday. But I want to see a positive backtest, greater than 1 million shares average daily volume, having a buy signal, and 0 to 5% move in the last 5 days, meaning it can have gone up 4.99% or down 4.99% or anywhere in between those 2 points. Because what I want to do is I want to capture it before it has the big run. Now, this is particularly an area that I want to focus on with Outlier 3.0 to see if this is needed anymore. So I'm not 100% sure I'll be using it soon, but this is what I would have had. All market caps. I'm a snob, so I only trade stocks that are greater than $20. The heat map is basically wait. Actually, I need to refresh this. This should go G50 to, well, basically it's just heat map value of 0 to 90. Yeah, that was a change that we've made recently. It used to go 0 to 50 on fear, 0 to 50 on greed. Now it just goes from 1 to 100, makes it a lot easier. The heat map moving up. Heat map meaning the behavioral heat map, and that is this value right here. If it's getting less fearful, more greedy, or if it's getting more fearful and less greedy. That's what the heat map is measuring right there. And then lastly, a green overlay. A green overlay is an uptrend. Now, this is AMD. I just happen to have this one up right here. AMD has not had many uptrends, which is why it's been in this big red downtrend for a hot minute. So after having plugged all those details into the screener, right, you can come up here and you can save it, or you can apply it. You can rename it, all that stuff. But then it's going to pop out certain names. Now, this will change. Because there might be a day where you see this first one here, FYBR, show up on Monday. And then the next day when you run it, FYBR is gone. If that happens, that means it's failed one of your criterias. I've had that happen to me. I've had people asking about that. But for example, if the fear and greed heat map turns around on Tuesday, when you run it on Monday, that's why you won't see it on Tuesday. Does that make sense? Or maybe the price change was 7% on Monday. So then it won't show there on Tuesday because it will have outrun that particular criteria right there. So that's where I would start. That is exactly where I would start. And then after you get into the screener, after you've already run the screener, after you see some names, then you can do more analysis on it, right? Does this fit your trading plan? That's the real key here is, are you building your trading plan to fit these ideas? Or are you just planning to follow them blindly? I would never recommend following them blindly. What I would recommend is looking at the data, seeing does this fit what you want to see, and then, of course, cautiously pursuing that trade, limiting your risk, etc. Great question, though. Great way to start it off. Bender says, I use it every day and takes us through it all. You'll be a pro at no time. Platform's getting a huge upgrade on Monday. That's right. And in fact, when I am trading, I go through every single step of how I'm finding these trades, putting the trades on, managing the trades, and taking the trades off. But in the meantime, I haven't had anything trading in weeks, and I'm so chill with that. I have no stress. Like today, I went to the gym, I went to Academy, and I picked up this cool shirt, and I love it, so I had to wear it right away. Bender, going to be a whole new learning curve, I'm sure, but it'll be worth it for sure. Eric's here, Corey's here, Dustin's here, Stocky Locky. Watched Chris and Brett earlier. Oh, the interview that came out. Very cool. Thank you. Has changed my perspective of the market today when we compare side by side to the 14% to COVID days. Absolutely. I'm really glad that helped you, my friend. Yeah, it's so easy to get suckered into the YouTubers who are like, oh my God, you got to buy the dip, right? But they don't talk about how far the dip can dip before it starts going back up, right? You can buy the mess out of the dip. Buy the mess out of the dip all day, every day. But wait until the stocks are crashing up to be buying the dip versus buying it as it's crashing down through the dip. Absolutely. All right, so let's see. Oh yeah, that's right. There'll be one Benjamin in the Easter eggs thanks to Chris's debt. Dude, I'm telling you, I went to the bank earlier and I got me a fat stack of singles to go fill up all those Easter eggs. That's for sure. Salty Brad, what's up? Dana's here. Brian's here. Let's see. I'm gonna go ahead and skip to questions. I know you guys are here watching live, and I really appreciate you saying hi, but I want to make sure that we spend the best time possible answering as many questions as we can. So let me see. Is it party time? Absolutely. Let's go. Let's see. Hey, Mark is not from Texas, but he heads to San Antonio. He's getting here as fast as he possibly can. That's right. Okay, so Decadent Wolf has a great question. Is UNH still a buy after a $134 crash? Okay, let's take a look at this. Let's go to look at UNH. UNH. Holy moly. Well, I'll tell you one thing. I would not have traded this because it ran up into these order blocks up here. This would have kept me away. I'm telling you for a fact. Now, is it coincidence that I happen to run up in there and get absolutely what? Absolutely what? Probably coincidence. But somebody was ready to sell at earnings at this level, and that's exactly what happened to you. Is it still a buy to me? Hell no. Stay as far away from that as you possibly can. But there's probably some YouTubers out there who are saying, this is the greatest buy of the century. Oh my God, you got to buy it today. Yeah, we know that. Skinny Buff Guy says, Chris has tutorials on the Discord platform. That's right. That being said, since he is building a subscriber base, perhaps he'll do a new set of video. Oh my gosh, yeah. It's going to be total. In fact, here's the first big announcement of the day. We are building what we are going to call Outlier University. And JC, if you're watching, you're one of the reasons that we wanted to do this. We are going to make stock trade, or Mark came up with this crazy idea. He says, take back the stock market. So we want to provide you education from as absolute beginner as possible, as in, what is a stock? Absolute beginner to absolute advanced, teach you everything that I know. So that will be coming soon. Mahesh is basically tasked me, hey, we want to get this done by the end of May. So announcement of the day, we are looking for beta testers. There will be a application form in our Discord that I'd like you to fill out. It's going to be simple. Just put your name and your email. And then I need you to basically commit to say, I'm going to help you make this as awesome as possible. So there will be some time requirement for you, but don't worry. Don't worry. We will pay you back with a huge prize pack. I hope that's okay. So like I say, the application for that will be coming soon. Probably Monday. Let's see. Is this vacation sure for Chris? Yes, because Chris is going on vacation immediately after this, out to the lake house. It's not going to be long. Just got to row up to the lake house for a little bit. Let's see. That's right. Don't mess with Texas. I'm so glad y'all love my shirt. So glad y'all love my shirt. Oh my gosh. Have you ever done spread betting? No. I have heard of it, but it's not. So, I don't even know what spread betting is. I assume that's I assume that's something to do with the stock market, but it could to do with sports, and I have no idea because I don't watch sports. Oh, look at that! Some hashtag outliers coming through. Don't forget, we will be drawing for a hat, an outlier hat, in just a little bit. Only 60 of you have. I see 234 people watching this at this very moment, and I want to send you an outlier hat. All you gotta do is type in hashtag outlier, but you got to spell it right. You got to spell it right, Corey. You got to spell it right. Okay, let's see. Let's continue on here. The entire portfolio is in red. Not mine. Ben asks a question. Percent of portfolio on a single trade. Okay, let's do this. Let's get real nerdy real quick. Hope that's all right with you. Real nerdy real quick, right quick. Now, I had to clear all my caches. I'm not sure how quickly I can get this to load up. Okay, that was pretty quick. I had to clear all my caches. So let's look over here. So percent risk per trade. It's a very loaded question. First off, you need to decide that yourself. Second off, I built a spreadsheet for you that does all the calculations. And you can find it inside the Discord. If you go up to the VIP Investors Toolkit, I think it's right. Where's it at? Not that one. Yeah, where's it at? Okay, in the effort of, I don't want to waste your time, it's in the Discord. So the position sizing spreadsheet here. What you need to do is you need to come in here and you need to add your account information, right? Let's say you have 100,000, maybe you've got 1 million, maybe you've got 25,000, doesn't matter. And then start with what risk you feel comfortable with. I would say 5%, but this is not 5% of your portfolio, not at all. Let's break this down. I like to use Coke and Tesla as my examples of two stocks. Coke being a boring stock. In fact, I'm drinking some, I just finished it. Some, what is this? Orange cream, Coke Zero. Orange cream Coke Zero. I love a good Coke Zero. I don't know if I love the orange cream though. So looking at these, right? I drive a Tesla and I drink Coke. So I have a boring and an exciting thing in my life. Now, this shows you the current prices of each of them. But what we're wanting to find out is how much risk are we willing to take? So for example, if this is the current price of Tesla and this is the current price of Coke, where would we get out? So my exit rules are half of an ATR. An ATR, like I said, we're going to get real nerdy. An ATR is on basically all charts out there. And you can look and it'll show you what the average true range is for X number of periods. I've just used the default 14. I had someone in the Discord bring up, why not a different one? The answer is it's just the default. Can it be a different one? Yeah, for sure. And I might backtest it to see if one's better or worse. But going back to the spreadsheet here, half an ATR from the current price of Tesla would be going down to 226.39 from 239.14 or 239.42. The ATR of Tesla is $26. So the average true range over the last 14 periods is $26. That's huge. And then you go up to Coke, the average true range of the last 14 periods is less than $2. So basically it's 13 times higher in volatility, because that's the average true range. That's what we're measuring here in Coke versus Tesla. Now, the half ATR is just taking this divided by 2 and then subtracting it from the current price. So like it's down about $1, which would make sense, right? Now, in this calculation, it comes up with share size. So share size follows this formula. And I got this from Larry Height. You take your account balance, multiply by the risk you're willing to take, and then you divide it by 2 times the ATR to get you a number of shares. So in this case, that exact formula would get you 317 shares. Now let's add a couple columns here because I want to make another point. And I'm going to have to reset the fill color, then make it bigger. So if I had 317 shares and the current price is $73 equals this times this. And then let's make this here. That would be $23,000 of my $25,000. Hang on just a cotton picking minute here, Chris. That is not 5% of my account. I know it's not. But here's where the math comes into play. You're not going to watch this go to zero. Are you? Or are you? I mean, I can't tell you what to do, but I certainly wouldn't be watching it go to zero. You're making the assumption that if price goes below 72.05 in Coke, you will get out. The difference between 73.04 and 72.05 is about $1. About $1 times 317 shares gets you $317 of risk. Pretty cool, right? Or $312 in risk. Right? We're not trying to take this all the way to zero. So that's why I said this is somewhat of a loaded question, because you could go nearly full port into Coke, but you probably wouldn't want to. Now, here's the real hack. Here's the real hack. Rather than trading 317 shares and taking up nearly your entire portfolio, how about we do this with options? How about we do this with just 3 options? And if we go to Coke's options chain, and we go to the 80 delta, which is generally where I like to trade at, so right here-ish, $6.30. Okay. Let's say I purchase 3 of those for $6.30. So 3 times 6.3 times 100 means I would have to outlay $1,890 to get the equivalent of $23,000 worth of stocks. Now, this is such a pro move, such a pro hack that I don't think most people can grasp what I just said. For $1,800, I control $23,000 worth of stock. Basically, better than a 90% discount. For $1,890, I have the equivalent, basically, of $23,000 worth of stock. Pretty sweet, right? And we've discussed before about the options pricing's decay and how when it's in the money, this is a leveraged investment. When it's out of the money, it's a lottery ticket, right? A very, very different perspective just based on where it is on this grid right here. This grid will make all the difference. So rather than getting into all the details of that, the other thing you need to keep in mind is I can't price out the option for you in the spreadsheet. So while I'm saying $312 of risk, that means that each one of these would have to go down by how much? So if we have 6.25, I think it was 6.3 earlier. And then we only want to risk, so we're doing about $300 of risk, right? So basically each one could go down by $1. So each one could go down to $5.30 before you get out. And that would be equivalent to that amount of risk. And then I know what you're thinking right now, but Chris, this isn't 5% of 25,000. This isn't 5% of 25,000 because 5% of 25,000 is how much? It's $1,250, stupid. No, it's by design. It's by design, right? We can't guarantee we're going to get out with this much risk. So rather than hoping and praying that, oh man, I really hope that I get out with this much risk, how about we just under leverage ourselves, right? We've already leveraged to the tits, okay? This may be a Texas thing, I don't know. We've already leveraged to the tits. What we're doing here is making sure that even though we're leveraged to the tits, we're not over leveraged even more. Okay. Does that make sense? Fantastic question. Thank you for allowing me to nerd out for a minute, because this is my jam. I love this so much. Okay. Let me continue on here. The shirt goes just as hard as the intro song. Thanks, James. Thank you very much. Susie says, when my stocks has a big loss so far. I probably was trying to say one of my stocks has a big loss so far. So here's the deal. There are 4 potential outcomes of any trade: a big win, a small win, a break even, or a small loss. There should never, for the history of time, be a big loss. Ever in the rest of time be a big loss. Because, for example, on here, right, we talked about Coke. We'll continue on with Coke as an example. If we go to Coke, which is one of my saved ones here, and we get it, oh, here we go. That's handy. We get in at 73.04, right, give or take, and get out at 72.05, right? If that happens, it happens. That's part of the game. In fact, I would also really want you to point out that there is no shame in losing money on a stock trade, but to hold on to a loss and let it get bigger and bigger, or even worse, buy even more, that's amateurish and self-destructive. So if you figure out where you're going to get out on the chart, you in the context of everybody watching, you have to hold yourself accountable to following through with that plan. If you don't follow through with that plan, option 5 comes to the table. Option 5 shows up and rears its ugly head, and it's like, what's up, bro? You invited me to the party, huh? Well, I'm going to take you down. I'm taking you down. Yeah, we don't want that. We don't want option 5 to show up. No. Rico Suave in that shirt. I should wear these type of shirts more often. You guys are so funny. Okay, lots of hashtag outliers. Very, very cool. All right. So question from the senator. Dude, if you're a senator, you should tell me. If you're a senator, you probably are working with Marjorie Taylor Greene and Nancy Pelosi and making these type of moves happen. You tell me, man. You tell me. But to that point, I don't know why. But I'll tell you, it's been in an uptrend for a while, right? It's been in an uptrend for a while. And usually stocks in an uptrend can continue on in uptrends. We don't know how long, and I'll never say buy this one stock and you'll make $75 million by the end of the week, which some YouTubers say, and I don't understand why. But it does have some overhead resistance right here in this order block that was created ages ago. How far back do I have to go to this? 2020. This order block from 2020 right here that it's in the middle of, really struggling. And then a new second double stacked order block just got created. And then there's a bullish order block right here. My bro, this is one I would not touch. I wouldn't be buying this with your money. That's how I'd look at it. Luke says, how do you handle theta decay on your long options when they near expiration? Great question. Great question. So I saved this slide the other day and I knew that I'd be coming back to it. So that's why I saved it. So since we talked about options just a moment ago, an in the money option is a leveraged investment. Now, I generally look for 20% extrinsic value. Extrinsic value is the part of the option that will go to zero every time, no matter what. And so if we look at this particular one that I picked out earlier, it was 59 cents of extrinsic value, $5.66 of intrinsic value. What does that mean? This option is worth $5.67 right now. It does have some time value associated with it, however, and that time value will decay to zero. So how much of that is the time value? So if we look right here, 62 cents divided by 635, 0.62 divided by 6.35 means only 9% of my option will decay. Now here's where we're going to get real tricky. This has 29 days until expiration. So basically, I have 9% divided by 29 days, meaning only 3-ish. Did I do that right? No. 20, no. Hang on. 29 divided by 9. Yeah. 3% of that, of the 62 cents will decay. So basically, so 0.03 times 0.62 means that 1.8 cents per day will decay, right? Only 3% of my extrinsic value will decay, which is hardly anything in the context of this option as it goes through time. Now, I generally start at 21 days. I'll go a little shorter, a little longer based on liquidity, or I may not trade at all based on liquidity. But the point is that when I'm doing the leveraged investment, I'm trying to keep my extrinsic value, what I have to pay for it, as low as possible. Whereas if you buy an out of the money, where I'm buying in the money, or even at the money, 100% of this, every bit of this that's out of the money is extrinsic value. Every bit of this will decay. Every single ounce of it will decay, just like every other strike. However, my investment has moneyness. My investment has intrinsic value. Yours, I'm not saying you, I'm saying you as a general term. Yours has no intrinsic value. Yours has no value whatsoever. So that is why this one will decay at this rate here, because the closer you get to expiration, the sooner all the decay has to come out. All of the extrinsic value has to come out. I'm over here and it's only a smidge. You're over here and it's like, okay, well, it starts as a smidge. And then every day that goes by, that smidge gets a hell of a lot bigger day after day after day. Both go to zero at the same time. But one is starting with 20% of the options price. The other is starting with 100% of the options price. So fantastic question. Really appreciate you. I hope that answer was good. All right. BTC boy, he opened the door. What is 3.0 and how much does it cost to have access? Chris, you're welcome. So 3.0 is the biggest upgrade to Outlier we've ever had. 3.0 is completely different. It's going to feel similar, but it's completely different under the hood. All new charts, all new buy and sell signals, all new everything. You already see it. You already see the preview of it. This goes live on Monday and at no extra cost. At no extra cost. If you are already an Outlier member for $2.99 a year, which is only 82 cents a day, you're going to log in on Monday and it will look completely different. If you don't see it, you need to clear your caches, clear your cookies, which is exactly what I had to do this afternoon. And then it should show up for you. If you're a monthly member, I would suggest you upgrade because you save 64%, which is totally worth it, of course, but it'll also show up for there too for you. And there's this big red button that says save 64%, which I really encourage you to save 64%. Now, you already see it. Introducing Outlier 3.0. Outlier 3.0. Now, let me show a couple things here real quick. Now, Outlier 3.0 is going to look very similar to Outlier 2.0 that you're used to, but a lot has changed. First, you'll notice we have all new charts. Now, I am in the dev platform, so it will run a little slower. I'm telling you that right now. In the actual production platform that goes live on Monday, it should be snappy. Should be really snappy. So we're going to look first at AMD. AMD, our favorite stock, AMD. You'll notice here a lot more buy and sell signals coming through, a lot more. And in fact, if we compare here, right, there's like 1, 2, 3, 4, 5, 6, 7 total signals on this whole chart for the year. Where if I go to 3.0, you're going to see, I don't know, probably twice as many, 3 times as many buy and sell signals. Now, of course, the objective here is to limit the amount of risk you have, not trade you more often, but limit the amount of risk that you have in the market. And then you notice a couple other things is we have indicators now. Now, we don't have a lot, but we do have some, and we are going to be adding more day after day after day. So over here, indicators, right? We can add different indicators like this. You can change the color of your lines, which I matched mine on my other charts right here with the 10 under the 20, price under the 50. And then down here, this is the market breadth for this particular sector. And again, you can add different, so candlestick is this chart up here. Uptrend, downtrend is down here. And you can, let's say we go with the EMA 5. I already got the 10 on there. And we want to put it in, let's put it in, we already got green, we already got blue. Let's put it in red. I don't know how well the red's going to show up on that red background, but let's just see. Look at that. Look at that. So we have more indicators on here. And Mahesh, I just asked him earlier, ATR is coming in the next couple of weeks. But one thing you'll already see on here, are outlier blocks. Did anybody else notice the outlier blocks? Let's freaking go. And you can click them on or off. That's your choice. If you want them on or if you want them off. But yeah, outlier blocks will be an outlier from now on. And then let's say you don't care about all those extra details. You can come through here, and that's the wrong button. Go to show hide some columns, and you can get like a total maxed out view. I think it's this button here. Yeah. You can get a total maxed out view. And in fact, if that's not big enough for you, we got this button. Full screen, baby. Oh, and look, dark mode. I don't care for dark mode, but we got dark mode too. Now, a couple other things I wanted to show you over here. First, this should look familiar, but we have a new master key widget. This is so freaking cool. A new master key widget. So at a glance, you can see, is the market set up? Is the market even set up to go into anything? Within a glance, you can see it. So both of these are locked. You'll see right here. Bearish is locked. Bullish is locked, which means I wouldn't put on a trade either direction. It shows you the SPY signal, the market trend, market breadth, and sector breadth. And then on top of that, this is really cool, we have speedometers. It shows you how fearful or greedy the sector is. So XLK is the tech sector, and how fearful or greedy the stock is. How cool is this, right? How cool is this? But the thing that you're going to freak out over, the thing that you're most excited about, right? We got new charts, we got new indicators, we got new buy and sell signals, we got new order blocks or outlier blocks. We got all kinds of new stuff on this page. But what you're most excited about, I'm sure, is the performance summary. Now, this chart will populate by Monday, but what I want you to see is the signal return right here. 193.4% on AMD. 193.4% following these buy and sell signals. So I'm super stoked about this. I cannot wait for you to get your hands on it. But how about we look at another stock? Like, how about Tesla? Tesla was one that a lot of people gave us flack for, because in 2.0, let me see, where's Tesla? In 2.0, we got this buy signal that didn't trip a sell signal for a hot minute. Now, in 3.0, look at this. Sell signal came right at the top, the whole way down. Of course, a little buy signal, it looks like, come through here recently with another sell signal. I'm not hovering on it just right. Like I say, this is still in dev. There it goes. Buy signal came through. Another sell signal came through recently. And then performance summary. How about 1,237.91%? 1,237.91%. And let's just compare that to current outlier. Only 452%. So we basically are tripling the returns. Tripling the returns. It's going to blow your socks off. Average holding time is now down to 6 days versus average holding time at 19 days. So a little bit more frequent on the signals here. And I'm telling you, I'm so stoked about this. So stoked about this. Now, this is going to be in your Outlier account on Monday. You don't have to do anything. It's just going to be there. Now, there is a chance that it won't show up and it'll look weird or something. Just clear your caches, refresh. You may have to restart your PC, something like that, but it should be there. Keisha says, oh my goodness, I'm excited. I am too. Steve says, could the up and down trend sections be more subtle in color? That definitely can be an enhancement, because you're right. It is a bit more obvious than these on the uptrends and downtrends in the background. I see your point there, Steve. That's a great point. Let's see. I'm gonna have to scroll up to catch up to everything. Okay. Deep Thought says 3.0 looks amazing. Mahesh, you're the GOAT. Dustin says he sees the outlier blocks. Oh, real cool thing with the outlier blocks is you'll notice some of them like stop, and that is by design. We want to show you where the outlier block ended, right? So for example, when I use TrendSpider, let's go to Netflix, because I know for a fact in FLX there was one a while ago at previous all-time highs. I think it was right in this area. I remember drawing that line right there. And Mahesh was about to buy it, and I was like, Mahesh, you got order blocks right here. Don't buy it. And he's like, I'll be fine. And then it went down right afterwards. So I specifically remember that one. But it disappeared. You wouldn't even know it was here. However, if we go into Outlier 3.0 and we type in Netflix in FLX. And like I say, this is slow because it's in dev. Let's let that load. Question, would 100-day moving average be helpful? Totally digging the outlier blocks. Yeah. So we are having more and more indicators being built in. As of right now, it's not there yet, but we are building in basically every indicator there is. Let me see. Okay, there we go. I can zoom. There's that order block. Isn't that cool? So we can see where it terminates because price went on top of it. So now we can look back at these and we can say, oh, you know what? That makes sense. I see why it happened to stay there. And I don't know if you noticed, but you can zoom in and out using your mouse cursor like you could on every other charting platform, which is really cool. I'm excited about that. I'm very excited about that. All right. Luke says dark mode. I know, right? Yes. We are adding ATR and all kinds of other stuff. Let's see. Okay. Let me see if there's any other questions. Hey, there's Mahesh. We're working on fixing bugs. Okay. We'll be working on fixing bugs and gaps the week following the launch. So next week, then we'll be working on getting more indicators after that. Thank you, Mahesh. Yes, custom EMA colors are on there. But custom EMAs, I don't think are on there just yet. So if I went to here, I go to select indicator. Oh, there it is. Select indicator. Cool. I didn't even know you could do that. Awesome. Corey says, I love it. Mahesh says, joined a little late to the party, but have you shown market breadth yet? No, I hadn't even got there yet. I'm so stoked about this part. So market breadth, this is something that is probably takes the most amount of time for me, because right now in Outlier in 2.0, if you go to market breadth, one thing in my strategy, one thing I think everybody should be looking at is the market breadth bullish or bearish? And then is each sector that you're looking at trading bullish or bearish, right? So if I go to financial sector, we can see, hey, you know what? Actually, scroll over here. Actually, this is getting more bullish. Did it have a crossover yet? Oh, looks like it might have crossed over yesterday. Cool. How would you like to know all the sectors all at once? How would you like to know all the sectors all at once, all in one place? We got it. This is really cool. So in the market breadth tab, you can see all the sectors all at once to show you if they have a bullish crossover like this, like I just showed you right here, or not, right? So we don't have any that are bearish crossed right now, which is why that's not there. But like utilities, staples, etc., all of them are bullish. But then you'll notice here, discretionary is weakening bullish. So if I click this one, you can get right to it just from the one click, and then you can see the chart right here. Hey, you know what? It is getting weaker. It is getting weaker. And each one of these is a little, it's called spark chart. Each one of these is a little spark chart for the market breadth for that sector. How cool is that? Yeah, Peter, this is really nice. Good job. Not me. It was Mahesh. All Mahesh. Stocky Locky says, love the look of it. Buying it this weekend, dude. It's going to be awesome. Like, I can't express to you how big of a change internally this is. It may look similar, but it's all brand new under the surface. Yeah, like the Decadent Wolf says, this is a huge upgrade. It is a tremendous upgrade. Bobby's World says he's looking forward to trying it. Spyro says, Chris, are there measuring tools on the charting to use when measuring percent between data points? I'm glad you asked. I'm glad you asked, because that is one thing Mahesh really, really was excited about. So if we go into here and we go to, I think it's this line right here, and then we go from A to B. Oh, I think there's a bug on that. That one will tell you, hey, it moved X%, X number of dollars. So yes, that is there. It seems like there's a bug on it today. I have used it and it did work. So yes, that is definitely coming. There are a couple other ones I hadn't seen before. Like this measure tool is really neat. So you could like do this. You could say, oh wow, look at this. Min, max, average, 187 candles. That's really interesting to me, right? You're going to find different indicators that work great for you. Different things in the chart. Hey, you know what? How about we draw a line on the chart? Boom. We got lines now. And then you're like, I don't want red. Oh, that's cool. I'll change it to blue. And then I'll even add a line. So like, here's a, wait, let me type quickly. Here's a super sweet blue line. And then add, and look, here's a super sweet blue line right there in the chart, right? We got a 454 under that hood. Yeah, all kinds of cool stuff. And then to Corey's point, now it actually shows you price, right? So you can put your line wherever, and it shows you where the price is at there. And then of course you can add more and more lines. So all kinds of cool stuff. Robert asks, Chris, for the performance summary, what are the entry and exit prices? Performance summary. I'm assuming it's market open price the day at. Okay. Excellent question. So this is one that we had an internal debate over. And a lot of backtesters will do exactly that. They'll say, okay, the entry price, let's say today's Thursday. The entry price is the close of Thursday, which you're never going to get. You're obviously never going to get. So we were like, okay, what can we do to make these results realistic? So what we did is we took the average price from Thursday's close to Friday's close. And we said the middle, the average price between Thursday's close and Friday's close. If you're going to trade, you will be able to get somewhere between those 2 points. And that is what we use for the open and close signals on the backtest. So this is not, oh, this is the absolute best theoretical possible. No, we actually said there could be better results. And we chose to give you the ones that are most likely to happen. The most likely to happen, because you're most likely going to get between Thursday's close and Friday's close. Isn't that cool? Mahesh is the man. That's right. Dude, TrendSpider has no idea what's about to hit them. No idea what's about to hit them. Let's see. I'm looking through the chat here to see how I can answer questions or help you up with this. Pick JMac right there. Market breadth page updates. Yeah. Default view settings. Great question. So I know this is coming. I don't know if it's going to be ready by Monday, but I know this is a high priority item that when you make these changes on here, that they are sticky. So sticky to that chart, and then sticky to your profile, right? So if I go, I don't know if it'll work. Let's just do it on the fly. Let's go to SoFi. Everybody loves SoFi except for me. Everybody loves to talk about SoFi. What? Mari, I don't know what kinky kind of stuff you're talking about here. Okay, let's look at SoFi here. So, okay, the moving averages didn't stick on this time, but I know that is something we are coming like a very, very high priority item for us to be sticky profile across all the stocks. But let's go look at the performance summary of SoFi. Dang, only 79% returns. Only 79% returns with the average holding period of only 3 days. Dang, gum, that's in and out. But you can see right here what that looks like. And in fact, Mahesh just right before our call, Mahesh and I were on a call together, and he's like, Chris, I think I have an idea to make the signals less noisy. So rather than having all of these signals, a little bit less noisy and a little bit higher returns. Hope that's okay. Dave, seeing the changes from 1.0 to 3.0 over the past year, all I can say is, wow, home run. No joke. Yeah, only 452%. Yeah. How does a max drawdown get calculated? That's easy. So that is if it were in a buy signal, how far down did it go from the highs, right? That's what that means. Trying to catch up on the chat here. Why would you turn off order blocks? I don't know, dude. Some people may want to turn those off, Brian. I don't know. Ryan says, you often show a slide of key moving average signals. Just notice. Oh, yeah, for sure. That's Steve's cheat sheet that I got from him. Here we go. Brian's question is, just notice the bottom, some key crossovers. I've been reviewing the 520. Please share your thoughts on this. 520 is a big one for Steve. He really talked about how important the 520 is. In fact, that may be one of his like trading signals. You will find all kinds of different crossover signals. I actually really like the 520. And here's the thing. The 520 must already be crossed for the 1020 to happen because the math, right? The 5 is going to move faster than the 10. So the 5 and 20 will always be crossed before the 10 and 20 cross. And that may be a great spot for you. Maybe. Be sure you take a screenshot of this. Let me get on here. Mahesh says, EMAs and order blocks will be sticky by Monday. Lines will be sticky a week after that. Cool. All right. Chris is a new Richard Dennis. There's a very good chance of that. There's a very good chance of that. Very, very good chance of that. I'll never take that from him, but I'll be my own. I'll be my own guy. I'll be Batman. Can you ask Dev to add a predict tool for for social media Trump posts? That's really good. That's really good. Knight says, is a half ATR line possible like the ones you draw for exits? The half ATR should. Yeah. Oh, yeah. So for example, let's do that. Let's do that together. If we look at Coke, let's do this together. If we look at Coke, and we're going to do the same exercise that we did over here earlier. Where is Coke? Okay. So let's say that I get in on Coke and I draw a line, right? It's going to be hard to see off to the far right-hand side of the chart, but there we go. Let's say I draw a line and I mark it red, or I'm sorry, mark it green because that's where I got in, like a dark green. That'll work. Let's say opening, add, and then I can add, I think I misspelled that. Yeah, opening, and then add another line down here for my half ATR. And I like to make those orange. Say half ATR. Add. And then, of course, if it's not the right price for you, just drag it around to where you need it. Just drag it around where you need it. Boom. Just like that. Pretty cool, huh? Very happy with this. Freddie asks, will y'all keep ownership of Outlier and stay loyal to us, or plan to build it and sell to some big company for a 50 million? Dude, no way. First off, we're not taking less than 50 billion. So unless they come to town with 50 Bs, ain't gonna happen. Let's see. Brian says, already had a screenshot. That's how I noticed. Very cool. Kevin says, raffle time? How about that? Let's do raffle time. All right. If you put Outlier, hashtag Outlier in the chat, I'm going to give away an Outlier hat like I got right here. How's that sound? We're going to do that. And then after that, we're going to do the weekly winner circle. So here we go. In 3, 2, 1. Let's see who the big winner of the day is. Who's going to get himself or herself an Outlier hat? Bender! Oh man, Bender, let's go. So Bender's super active in our Discord. Congratulations to Bender. Bender's going to get himself an Outlier hat. Outstanding. Way to go. All right, very cool. Now let's do the weekly winner circle. So in the weekly winner circle, we want to show you off. We want to show you how much we appreciate you, right? So every week we do this. We are trying to hear how you are using Outlier, right? And of course, there's all kinds of different ways that you can use Outlier to save money or make money. And in fact, let's share this one real quick. So Simplify guy, hopefully he's watching live, just staying in cash, which is boring, but it is what it is. And Outliers taught me that that is just fine to do so. The Joker wants us to burn our cash. Batman teaches us to chill and stack it till the time is absolutely right. For sure. And yeah, Mark, one of our partners, put this up. Yeah, for sure. We don't want you burning cash. We want you to save time, make money, and start winning with less risk. So that was a great one. Let's see any others here real quick. Screech said, thanks, Outlier team. With let's see what he did here. A $505 profit. Hey, that'll pay for like almost 2 years of Outlier right there. Way to go, Screech. Let's see who else. Carol got all 5 books. Outstanding. Let's continue on here. Earth Native says, thank you. I got out of AMD at 114, which was my longest hold since 2022 with a slight you got out of AMD with a profit. Way to go. After I have realized the downtrend you were mentioning so many times, you really changed my approach and how I look at charts. So on AMD, you saved my backside. Thank you very much. Very cool. Let's see. So Nordes in our Distus, there we go. At $215 this week, dude, that's outstanding. Congratulations to that. Don't ever feel bad about a green day. That is what you want, right? This is not the Boulevard of Broken Dreams. This is not Dookie. This is Outlier. This is Outlier. So the weekly winner circle is so cool. All we ask that you share your stories with us. And then the winner of this is going to get a $10 Amazon gift card. But I'm not going to draw. We already got all 16 possible winners listed out here. We're going to let random.org draw for this one random guy. Let me double check that it's 16 numbers here. Yeah, here we go. In 3, 2, 1. 6, number 6 on the list, just won a $10 Amazon gift card. Where's that list? Johnny. Congratulations to Johnny. Hope you're watching live. You just won a $10 gift card. Outstanding. So we'll get April to send you guys a hat and a $10 gift card on Monday. And I'm super stoked that we can do this for you all. This is so much fun. Okay, so let's continue on. I got a couple minutes. What other stock related questions do you have that I can help you with? Oh, there's Bender right there. Joy from Bender. Bender, do me a favor, email us over at support@outlier.com, your name and address, which we might send to space. I'm not entirely sure just yet. Whatever planet you're on, planet Krypton, who knows? But let us know your name and address. And oh yeah, thanks. That's going to go great with this OPP bullhorn. Outstanding. Joe says, yeah, hit the like button, people. Come on now. Oh, Anthony says, can you look at the CAG and PFE? Which chart looks best? Oh, okay. Let's do that. Let's look at CAG and PFE. I was like, compound annual growth in PFE? I was confused. Okay, let's look at CAG real quick. I'm going to do this in TrendSpider just for the sake of making sure it's fast because the dev portal is a bit slower. So CAG doesn't look great. I would not be buying this, not even with your money. And if I look at PFE, yikes. Yeah, this one's even worse. Which chart looks the best? Neither. But CAG is the one that looks less bad. I'll put it that way. Skinny Buff Guy says, I'm just going to wait for 4.0. He's Canadian, so it's basically space. Sasha wants to look at hymns. Let's look at hymns in 3.0. Why not? Let's look at hymns in 3.0. I got to type it right. Page not found because hymn doesn't exist. It's hymns. Okay, looking at hymns in 3.0. Currently sitting on a sell signal. And if we add our moving averages, so we'll do, yeah, that, select indicator 10, add it blue, add, and then we go 20s black, down here, add, and then 50s red, here. Right, so we can see that's clearly in a downtrend. As that sell signal right now, look at this, the buy signal came and you got to run it the entire way up, selling it like 2 days after the top, 2 or 3 days after the top. What's the performance summary in here? Only 559.85%. Only. Sprouts. Christopher wants to look at Sprouts, SFM. Sprouts Food Market. All right, so Sprouts has a buy signal. Oh, look at that. The sticky moving average is stuck. Very cool. Buy signal came Thursday, April 10th. So a couple days old at this point. It's getting, in fact, oh yeah, this is today's date. I wasn't sure if this was a couple days old. It's getting more greedy. That's what we want to see. And let's add a couple things on here. Let's show our sector, and let's also look at the market breadth for this, right? Okay, so the sector is getting less fearful. Then if we look at the market breadth for the sector, it's still bullish, but it's waning. It's still bullish, and it looks like it might cross over here on the market breadth of that particular sector, the discretionary sector, I believe. So super cool, right? Man, this is so cool. I am so stoked to show you Outlier 3.0. And I'm so stoked because this is going to be in your account on Monday. Now, like I say, you may log in and it may not look right. So just clear your caches, refresh the page. You might have to restart your PC, and then should be good to go. So listen, I hope you have a fantastic Easter weekend. I'm going to be out of town, but then I'm going to be back and enjoying my kids, celebrating that Jesus is risen. So grateful that we can do that on a weekend like this. Have a fantastic Easter weekend. I'll see you right back here on Monday, and I want to hear all the cool stuff that you're doing in Outlier 3.0.